support. Dollar index wise, currently sitting at 103.27. 103.50 this morning was the level to identify for the break or the bounce, which is what was put out across the community. Dollar weakness coming post news. We won't go into that. We'll go into that at more of an advanced level. However, price is now trading below 103.50. As we can see, price this week has pretty much just bounced between 103.50 and 104, a 50 pip range. For those of you that work close with me will know that I always work in increments of 50 on across all of our majors. That helps us position our intraday trading opportunities, giving us boundaries to target, but also areas to look for bounces from. So 103.50 below was our area to look for short-term shorts. Personally, we're still dollar long in the near future, but now we've got to understand the momentum is weak post-news, so we have to adapt and take advantage accordingly. I want you guys to take into consideration February's low, which met a price at 103.17. Maybe just jot that down, guys. 103.17 potential low. Even if we stick a level in there, just to remind yourself, it's allowing you currently about 10 or 11 pips away from potential support. So for those of you that are trading dollar weakness, I want you to bear in mind 103.17 and of course 103 support to look for these bounces. Breaks of support once again will then open the doors to further shorts, and we have to trade it on a momentum basis. When you're trading momentum, it's very reactive. We're not there to sit patiently and look at our weeklies and monthlies and plan the most beautiful trade. When money's in the market, momentum's moving. It's a smash and grab approach. You're acting on today, the now. You're not acting on what could happen in weeks, months, and years. It's a reactive. You have to be assertive in your decision. You have to take action when the market's moving. So that is what we mean when we say adapt to current sentiment. However, let's see what price does. Now, taking a bit of a deeper look into this, excuse all the lines, they're on the charts just for example purposes as we drop to the smaller time frame. But cyclicity wise, you can see price created inverse head and shoulders. You've got one cycle, two cycles, creates a low, new high, breaks the low. So we're currently sitting in a no trend as such. If price does break current low, then this would be your first cycle and a new lower low in a potential downwards move. Now, looking at further down the support, I can't see 101 being met, but however 101 is about the area where I would look for, and to be honest, if price meets 101, it's going to attract several buyers to step back in. I'm still taking this as short-term weekly phase 2 before another leg higher. So until price breaks structure, again, the truth is in the charts. Price action is the only leading factor in what we do, so we must follow price before making a decision. So that's I still see this as a weekly phase 2, so I'm not going to be heavy to the downside. I'm going to be looking for areas to reject and bounce. Euro, we looked at 108.50 as the level to break first thing this morning, and we started to progress upon that. We saw a nice 50-point move from 108.50 into 109. That's respecting from the 103.50, 104 on dollar index. Dollar index, euro dollar mirror image. A dollar index is an asset as such that measures a basket of foreign currencies, but is heavily weighted towards euro. Over 50% is euro related. So euro dollar most commonly traded currency pair holds a lot more weight. If I know dollar index is strong, dollar's strong across the board, my next point of call will be to short euro dollar, just because it has more weight to it. Market falls quicker than it rises. It just suits my trader personality. On the flip side, we've got this bounce from 108.50. Market's cycling quite well. It's not clean, it's not pretty, but it is cycling. Price now above 109.100. This here is what we call an exhaustion candle. For a lot of new traders, they'd be diving in gung-ho now, thinking buy, 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 buy. This is a sign of an exhaustion candle. I'm going to be interested to see where today's daily close lies. So if we close back below 109.100, I think, okay, fantastic. We're going to edge back, deeper time frame pullback. If price starts to plod along and we then get a move slightly higher, 109.20 is the yearly pivot. So that would be my area to look for that bounce back down. Dollar strength, euro dollar short. So let's just keep an eye on that. And again, to show you a daily chart, yes, we've got an extended cycle in here, and price is classed as a daily phase 1 uptrend as we speak. However, looking at a weekly time frame, which is not what I do commonly because I'm more of an intraday trader, I still want to see this as a weekly phase 2, perhaps reject that yearly pivot at 109.20 and then a leg back down. This would be my preference to be on the short side of euro. I don't think it's round the corner, but we're close. Cable was fantastic. Anything above 127 was bullish for cable. And again, working in your blocks of 50, you'll see that we've got moving into 1027.50, which is just slightly higher than the current high, guys. And you'll see price just shadowed that point. So there you go. Look, your 126 rejection last week, solid engulfing candle breaking low, changing structure. We then got to move into from 26.50 into 27.50 arising. So there's your cyclicity. Your market's bouncing. We have formed a higher high in this region. Price is currently showing an inside candle. However, we're only 8 minutes into the hourly bar, so we'll see how this progresses. Again, it's going to be very interesting actually to see how the market closes at the end of today. Does momentum shadow through this afternoon and break 127.50, or do we duck back below? So again, looking at a daily time frame, we've got tons of obstacles, slightly higher, so I wouldn't expect price breaking 128. This would be unusual territory for pound to be this high this time of the year. I do want to see dollar pick up some strength again, and then start to see those higher time frame legs lower. But let price action do the talking. What I mentioned at the start of the week was a potential double top formation off of 127 and a leg lower. Price action started to show us that could be the case, and then again the news-related candle price broke 127, huge momentum coming back in. And as you can see, look, the size of this candle is a 40 pip move in an hour, and it took pretty much 9 hours past that to bring price back to where it was after that one bullish candle. So showed you the weight and the momentum in that candle, in fact. So 9 hours later got back to where it started, and price started to pick back up. This here isn't strong buying. Strong buying is what we see here, strong buying again is solid continuation candles. We're not seeing strong buying in this period, so as that market starts to break down, it gives us additional signs, shall we say, that this move may not continue much higher. Aussie momentum wise has been fantastic. Again, 65 into 65.50, that 50-point range that we're managing on our hourly time frame comes through each and every time, and you can see you've got lots of softer level interactions through here. Price suddenly broke that today, so we'll be looking for the next point of call, anywhere between 0.66 is an area definitely of interest and a potential target that we could see, and of course there's a little bit of room before that as well. So in regards to scenarios, now my preference dollar strength, which I might have to wait for if I'm completely honest, but my preference being dollar strength, I want to build a scenario either side. So I'll be looking at, again, perhaps a pound rejecting 127.50, or euro rejecting the yearly pivot at 109.20 and then coming down. They're my scenarios for dollar strength. However, if dollar remains weak, I'm not just going to sit on my hand and not trade. So something like Aussie dollar would be the ideal opportunity to then start to look for cyclicity. So if dollar remains weak, we know the market never moves in a vertical line. It breathes, it cycles. So I'd be looking for potential bounces, perhaps back off 65.50, higher low formation. That'll be 2 cycles in a trend, moving averages crossing over, price above the average price. We're buying on momentum, buying on strength. So Aussie dollar would be my perhaps intraday opportunity should dollar remain weak. Kiwi's in a very, very similar position. Just to show you Kiwi from a daily time frame, we're back at support with short-term upside potential. 62 would be the ideal area to target. So you've got about 75 pips in play there. So looking at that from a smaller time frame, that's kind of what we want to see. Let's get price above, cycle above previous resistance, higher low formation, allow the market to pull back, minimum 3 bars, bullish engulfing candle, back in we go, trading in line with currency strength and weakness. Dollar CAD, again, working in blocks of 50, guys, makes sense on our majors. We can see price has just been pissing around between 135.50, 136. 136 lies as upside resistance. In the short term, price isn't familiar trading above. And today we've started to see the market break down. This is a lot of CAD strength. Again, news related on the back of earlier today. It's not all the dollar weakening off here. So we've broken structure. We've broken out of an area of consolidation we've been stuck in. So it's now about what's next. Price is 12 points away from 135. So we're not going to start shorting into levels of previous hard support. We need cyclicity. So allow the market to break, retest 135, and you've got to let's call it again another 50-point move in here down to 134.50. So you now know your blocks, your increments that you're working to and from, and that allows us to measure our risk to reward. If you was to short here and your reward could be potentially blocked at 135, you'll be risking 20-30 pips for a potential of 12 pip gain. It's not what we want to see. Of course, that's an inverse reward to risk. So that's what we're looking at here. We just want to see a cycle below 135, 134.50 potential target. Another scenario should dollar remain weak. If price comes and sits on 135 and then we start to get buyers come back in, you've got a range-based trade in here, but again, safe buying comes when we break 136 and start to cycle onwards and upwards. Remember, if your 1 hour time frame breaks any support or resistance and starts to continue empowering forward, that shows the higher time frame leading the way. We then drop to a 15, 5 and so on to look for cyclicity. Lower time frames provide more trading opportunities, more bars, more cycles, more entries. Dollar Swiss is something not high on my list at the minute. Again, we've just been messing around. It's not too attractive. However, if price breaks 0.88 in line with dollar weakness, not my preferred option, I'll then look at shorting. If I see a move above these highs in here, then I've got a higher time frame, higher high, and I'd look at continuing that move up. Not really of interest. Dollar yen is of interest to be on the yen strength side. So 150.50 was an area we was looking at price to break, which suddenly started to break down at the start of this week. This isn't strong selling. Momentum's very weak in here. However, it is moving. I mean, we've shifted 100 points in the space of a day. Not significant enough to say wow, but it's showing us where it wants to go. Yet the way that dollar yen's been positioned, yen has had a hell of a lot of time back in the last year and the start of this year in and around that 150 mark. It's now time for yen to pick up strength. Again, something we discuss at an intermediate advanced level would be how Japan's positioned against the dollar and everything else that's driven fundamentally. If we're just sticking for technicals, for easy listening, easy learning, should we say, again, buyers running out of steam, sellers kicking back in. So we're now below 49.50, an area that we had to break below. I do want this week to close below our low on the 29th, which is 149.20. So that will just give us a bit more leeway as to where we want to be. As you can see, that's this low in here. So what I'm looking for is an additional cycle below. I actually think we'll get the best entry on the 4 hour time frame. So what we want to see on the 4 hour, guys, is a break and a break of the 200, short pullback, where I want to see strong sellers, weak buyers. I don't want strong buying in here because that will turn me against shorting dollar yen. And then I want to see that leg lower. If dollar yen does drop off, but doesn't look as pretty as other markets or other charts, we'll take the idea that the yen is strong, and then we'll go and trade markets like euro yen. We'll go and trade markets like CAD yen. Where's CAD yen? CAD yen. Yes, we got a 4 hour lower low today, but obviously yen strength picked up this afternoon on the back of news, so we need that back below. Pound yen could be an option, and Swissy yen as well I like. So Swissy yen again broke the 4 hour low. I needed it to break below my level, as you can see marked. Let's see if we get a phase 2 lower high formation form, and then the phase 1 on the 4 hour, and then I'll chop into it on the shorter time frame. So don't always focus on the majors for your execution. Majors lead us into where currency strength, currency weakness may stand. Then we look at our cross currencies for more opportunities to trade. So if dollar yen drops off, yen cross pairs is the go-to. In regards to Bitcoin, guys, loads of you are asking me, love that breakout above 52,500. Textbook, you learn this stuff and it comes into play. It's amazing. 4 hour cycle. Again, we're not seeing strong buyers. So for me, I need a breaks above the all-time high. To be honest, I wouldn't really be diving in aggressively until I get breaks of 70,000. For those of you that know me, I've had a lot of profit taken in recent weeks, and I'm actually out of all CFD trades. I've still got coins holding in the background, but CFD wise, spread betting wise, I'm out of all crypto longs, Bitcoin longs in particular. So it would need to break 70,000 to be back of interest to myself to trade the momentum of it. Let's see if that happens. I know there's a lot of talk around the halving date in April, and price should tank before it rebuilds. So again, if you are Bitcoin long, start to manage price action. Now it does look like it's running out of steam, but again, I'm no crypto expert. I'm just trading what I see. Gold again. We want price above 2150 now, guys. I didn't think we was going to get the break of 2090 if I'm honest. This was a perfect area for a double top formation. I have been trading some of the momentum throughout that, but it's short, sharp, aggressive management. We're not holding on to these positions at all. Breaks of 121.50 is the ideal area to then look for a continuation in momentum. Let's see what price does. Again, I'm definitely interested in the daily close to see if we can peak above. That will really open the doors up to more intraday trading opportunities tomorrow. And that's where we're positioned. Core setup wise, gold's been phenomenal. There's been tons of trading opportunities. So that's it, guys. Dollar index, monitor price at 103.17 previous low and 103 support. Breaks of that, again, opens the floodgates to continuation of dollar shorts. So dollar CADs, dollar yens, dollar Swisses. If we fail to break 103 and we start to see a bounce, then you want to see a similar bounce of 109.20, which is yearly pivot, and that will open the door to dollar strength related trades. There's no harm in having multiple scenarios. We want to go where the flow is, go where the money is, and take advantage when trades are in front of us. So quick recap of the majors, guys. Keep up the good work, everybody. Keep booking your coaching sessions in, and I hope to see as many of you at all of our live events coming up in the near future.